Hi, I'm Doug Goldstein. Today we're going to talk about how to grow your money twice as fast. If you have any questions or comments about what you hear, or if you need help opening a U.S. IRA or brokerage account from outside the United States, be in touch with me. My email address is doug@profile-financial.com. So what's the best way to save, and how much should you save? I'm a panelist on another podcast called the Money Tree Investing Podcast, and I recently answered a question about how to invest monthly savings. I wanted to share with you what I advised. The first thing I said was save more. Before discussing specific investment tactics, I suggested doubling the amount of money the listener was saving. My experience as a financial advisor has taught me that many folks don't save as much as they can. One common rule of thumb is to save 20% of your income. If you can reach that level or more, you're well on your way to building serious wealth. The next thing that I suggested was choose investments carefully. This may be obvious, but there are really two principles that every investor should follow. Number one, keep in mind your time frame. Long-term investors can be more aggressive than short-term investors because they have time on their side to recover from potential losses. Though, of course, past performance is no guarantee of future returns, it makes sense for a growth investor to place assets in growth mutual funds, ETFs, those are exchange-traded funds, or manage stock accounts. Short-term investors and other people who can't afford or tolerate potential loss should invest in more conservative investments like highly rated bonds or bank deposits or money market funds. And the next thing you need to know about choosing investments carefully is, number two, keep in mind your risk tolerance and invest accordingly. A sound investment portfolio takes into account an investor's risk tolerance. Only choose investments that correspond to your personal risk threshold. Licensed financial advisors are trained to do risk analysis scenarios with their clients. If you don't know what your risk tolerance is or whether your current portfolio matches it, go ahead and meet with a qualified investment advisor today. Finally, once you have accumulated savings and determined how you should invest, take the next step and open a U.S. brokerage account to help you further your financial goals. If you'd like some resources on how to do that, download the free Profile Toolkit, which is a guide to opening U.S. brokerage accounts from overseas. And you can download the toolkit at www.profile-financial.com/toolkit. If you have any questions or comments about what you heard today, please be in touch with me. My email address is doug@profile-financial.com. And of course, don't do any investing until you read our complete disclosure at www.profile-financial.com/disclosure.